Happy Friday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's #2 economy. My name is Tony. Let's jump in. With the election results in the US, there is still so much to cover in the implications for US-China relations, so we will continue this coverage today in the second half of the video. We will begin, however, as we usually do, with the Chinese economy, and there is plenty to cover there as well. If you get some value from today's episode, don't forget to the like button, and it's always a big help if you'd like to watch any more of these episodes in the future and keep on top of China updates as they happen, to subscribe. Let's begin. In trading yesterday, Thursday, PRC stocks surged, with the CSI 300 up almost 3%. Some thought this was due to the election result in the US. No, this was despite the election result, not because of it. As we will discuss later, a second Trump term will bring many risks for China's economy. The stocks jumped due to rumors that fiscal stimulus is expected to be announced Friday evening local time, which might exceed expectations of around 6 trillion RMB and be as high as 10 trillion RMB. In fact, as this video goes live, the announcement should be just being made, so we may need to do a special video tomorrow examining it. As regular viewers know, this announcement is expected after the conclusion of the National People's Congress Standing Committee. The stimulus would be for local government hidden debt swaps, real estate support for the sector, and bank recapitalization, as well as an additional 2 trillion RMB for consumption stimulus measures. There is a lot of frenzied excitement for fat stimulus. According to state-run financial outlet The Securities Times, individual investors opened new stock trading accounts in October at the highest level since 2015. Well, policymakers will be very happy to see that. 2015 is not an auspicious year for the stock market, as that was the year in which the last major bull market saw a massive crash. Next up for the economy, we have new trade numbers to examine as well. And in fact, this trade data ties into this fiscal story, as well as the implications of the US election for China and its economy, which we'll cover shortly. So this all ties in quite nicely, actually. China's exports grew at the fastest pace in over 2 years in October, as factories rushed inventory to major markets in anticipation of further tariffs from the US and the European Union, as the threat of a two-front trade war nears. In October, exports were up 12.7% year-on-year, well above expectations of around 5%. In a move we have seen over and over again in recent years too, imports dropped more than expected, down 2.3%, indicating once again just how weak Chinese demand is. China is now on track to see a trade surplus in excess of $1 trillion this year, a number which will likely make China an even bigger target, especially as President-elect Trump and his trade agenda re-enters the White House. Indeed, as Zhang Zhiwei, chief economist at Pinpoint Asset Management Co., pointing at Trump's victory this week, explained, quote, "We cannot rely on exports to carry China's economy. I expect fiscal policy will become more proactive next year as a pillar of growth." End quote. Qi Wang, chief investment officer for wealth management at UOB Kay Hian, wrote in a note that Trump's win may pressure Beijing to implement a bigger stimulus. And according to estimates by Macquarie Group, with tariffs at 60%, China could require 3 trillion yuan, $420 billion in stimulus to counter the damage, with another 3 trillion yuan needed to turn around weak domestic demand. And that brings us nicely to our next story. Yesterday, we did a deep dive into what a second Trump administration will mean for China. Give it a watch if you're interested in that, and if you haven't seen yesterday's video or coverage, we now supplement that coverage here today. According to state media, General Secretary Xi Jinping gave President-elect Trump a congratulatory message in which he, quote, expressed the hope that the two sides will uphold the principles of mutual respect, peaceful coexistence, and win-win cooperation, strengthen dialogue and communication, properly manage differences, and expand mutually beneficial cooperation. End quote, adding that the two countries should, quote, forge the right path for China and the United States to get along in the new era, benefiting both countries and contributing to the world. End quote. Commentators were quick to point out that the conciliatory sounding message is not surprising, as the PRC does not want an escalation of trade and other tensions, but they are preparing for them nonetheless. While we are here, we note too that US-based Bloomberg reports, citing unnamed sources, that President Biden will meet with Xi Jinping in Lima, Peru next week at the APEC Forum. This will be the first sit-down in a year. The two last saw each other for an extended meeting near San Francisco on the sidelines of the 2023 APEC summit. But now that Biden is a lame duck president, it's likely we will see nothing more but basic rhetorical and boilerplate statements from the two sides. Meanwhile, US-based technology media outlet The Information reports that ByteDance, the Chinese parent company that owns TikTok, believes it may be able to convince Trump to tell the Department of Justice not to enforce the law banning the app, which is scheduled to go into effect on the 19th of January. While only Congress can repeal the law, TikTok executives are hoping Trump could take other steps that would blunt the impact, such as telling the Justice Department not to enforce the law. As veteran China analyst Bill Bishop observed today, quote, "Trump may see that as a win-win, both for his donor and large ByteDance shareholder, Jeff Yass, and as something he can offer Xi in exchange for a deal. Five Eyes member Canada has ordered TikTok to close its business operations in the country for undisclosed national security reasons, but is allowing the app to remain available in a seemingly strange split decision." End quote. What most analysts agree on is that the unpredictability of a second Trump administration will be something Beijing struggles to deal with. Tang Shiping, an international relations professor at Fudan University in Shanghai, in China, observed this week, quote, "A lot of people here, including the government, I think, are preparing for certain upheaval or storms, but nobody knows. I don't think anybody really understands or has a rough idea what Trump, in his second term, will be able to do." End quote. Today, Chinese financial media outlet Caixin published a piece called "How China Should Counter Trump's Threat of 60% Tariffs," in which the authors unpacked a report from the Institute of World Economics and Politics at the Chinese Academy of Social Sciences in Beijing, looking at how China should react to what they called Tariff Shock 2.0, highlighting the need for self-reliance and proactive efforts to boost domestic demand. Quote, "China's strategy to expand domestic demand is pivotal in addressing deflation and mitigating the effects of tariffs. Timing is critical. Expanding domestic demand before US tariffs are imposed would maximize its effectiveness, while delays would weaken its impact. Some US economists argue that a 60% tariff on Chinese goods would have a limited impact on the US due to three factors: potential renminbi depreciation, government subsidies to Chinese enterprises, and exporters sacrificing profits. These measures require careful consideration, however, as they could inadvertently lower US inflationary pressure and justify Trump's policies. In practice, these strategies are largely impractical for China, however. Local governments face fiscal and financial strain, limiting subsidies. Industrial profit margins are already narrow, leaving little room for exporters to sacrifice their profits. Additionally, the Chinese yuan is significantly undervalued by as much as 30% according to the Economist's Big Mac Index, making further depreciation unlikely. End quote. Therefore, in sharp contrast to the American commentators we quoted yesterday, leading Chinese economists themselves admit that China has very little wiggle room in the face of higher US tariffs. Now, let's look at the personal relationship between the two leaders. Xi and Trump enjoyed a warm, publicly at least, relationship during the first Trump term in office. However, in the final year, this relationship broke down after, according to the then White House, Xi lied to Trump over the phone about the nature of COVID in the early days. Even if this is just water under the bridge, much of the poor state of US-China relations is now structural, with personalities having limited scope to improve things. We note also the words of Ryan Hass, the director of the John L. Thornton China Center at the Brookings Institute this week. Quote, "Xi Jinping is an unsentimental leader with a dark interpretation of America's intentions toward China. He would be open to a friendlier leader-level relationship with Trump, but he would not expect a warmer personal relationship with Trump to dampen America's competitive impulses toward China." End quote. And of course, as we discussed yesterday, Trump's articulated trade agenda, if implemented, would be very painful for China, and may, as some have argued, bring China and the US further into a full-blown trade war. And frankly, it could be a two-front economic war too. Hong Kong-based South China Morning Post today writes that the European Union is planning for talks with President-elect Trump and his transition team. High on their wish list will be keeping the tap open for US funds to flow to Ukraine and avoiding tariffs on European goods. Quote, Brussels has already been told what Trump would expect in return, EU backing for his tough agenda on China. End quote. With the EU already well down the road to a trade war with China, and with North Koreans now reportedly on the ground in Ukraine, an East Asian presence in Europe, there may well be the political appetite in Europe to do just that. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. I hope you've had a productive week. I hope you have a good Friday. I wish you all a restful weekend ahead, and I will see you all tomorrow.